சங்கர், நான் ரெக்கார்டிங் ஸ்டார்ட் பண்ணிட்டேன். மணி 2 ஆயிடுச்சு. ரெக்கார்டிங் ஸ்டார்ட் பண்ணியிருக்கேன்.
நன்றி கணேசன்.
இணைந்திருப்போர் அனைவருக்கும் வணக்கம். இன்னும் ஒரு சில மணித்துளிகளில் நிகழ்ச்சி தொடங்கி விடுவோம். இன்னும் பல பேர் இணைந்து இருப்பதால் ஒரு நிமிடம் தாமதத்திற்கு பின் தொடங்குவோம். சரி, சங்கர், இந்த நிகழ்ச்சியை ஆரம்பிக்கலாம்னு நினைக்கிறேன். நீங்க அந்த அட்மிட் பண்றது நீங்க பாத்துக்கிறீங்களா?
நான் பாத்துக்கிறேன்.
ஓகே. இணைந்திருப்பவர் அனைவருக்கும் வணக்கம். அட்லாண்டா மாநகர தமிழ் சங்கம் சார்பாக நடைபெறும் தனிநபர் நிதி மேலாண்மை நிகழ்ச்சிக்கு வருகை தந்திருக்கும் அனைவரையும் வணக்கம் கூறி வரவேற்கிறோம். இந்த நிகழ்ச்சியை தமிழ்தாய் வாழ்த்துடன் தொடங்கலாம் என்று நினைக்கிறோம். அனைவரும் தமிழ்தாய் வாழ்த்து இசைக்கும் பொழுது எழுந்திருக்குமாறு பணிவன்புடன் கேட்டுக்கொள்கிறோம். மிக அருமையாக நம் சங்கத்திற்காக இசையமைத்து கொடுத்த சங்கத்தின் யூத் பேண்ட் குழந்தைகள் அனைவருக்கும் நன்றியை தெரிவித்துக் கொள்கிறோம். நிகழ்ச்சியை தொடங்குவதற்கு முன்னால் இந்த அட்லாண்டா மாநகர தமிழ் சங்கத்தின் முக்கிய அறிவிப்புகள் மற்றும் இந்த ஆண்டு வரக்கூடிய முக்கிய நிகழ்ச்சிகள் பற்றிய அறிவிப்பை வெளியிட தமிழ் சங்கத்தின் தலைவர் திரு சங்கர் தங்கவேல் அவர்களை அன்புடன் அழைக்கிறேன்.
நன்றி கணேசன். தாய் தமிழர்களுக்கு வணக்கம். இந்த வருடம் இது போன்ற நிதி சம்பந்தப்பட்ட நிகழ்வுகளை இனிதை தொடங்குகின்றோம். மேலும் மேலும் பல நிதி சம்பந்தப்பட்ட நிகழ்வுகள் நடத்த இருக்கிறோம் இந்த வருடம். அதே போல் அட்லாண்டா தமிழ் சங்கத்தில் சித்திரை திருவிழா வருகின்ற ஏப்ரல் மாதத்தில் 29ஆம் நாள் நடத்த திட்டமிட்டிருக்கிறோம். அந்த நிகழ்வில் பல உள்ளூர் கலை நிகழ்ச்சிகள், தமிழ் போட்டிகள் என்று பல விடயங்களை நடத்திருக்கின்றோம். எப்பொழுதும் போல் தமிழ் சங்க உறுப்பினர்கள் ஆர்வமுடன் கலந்து அந்த நிகழ்ச்சி வெற்றி பெற உங்கள் பங்களிப்பை கண்டிப்பாக செய்ய வேண்டும் என்று விரும்பி கேட்டுக்கொள்கிறேன். அதே போல் நம் சங்கத்தில் பல நிகழ்வுகள் நடந்து கொண்டிருக்கின்றன. குறிப்பாக தமிழ் அமைதி, ஆக்ட்ஸ் அட் டியூஷன் டியூட்டரிங் மற்றும் பல நிகழ்வுகள் தொடர்ந்து நடந்து கொண்டிருக்கின்றன. இந்த நிகழ்வுகளை தொடர்ச்சியாக உறுப்பினர்கள் பயன்படுத்தி கொண்டு பல நிகழ்வுகள் பங்கு பெற்று அந்த பயன்பாட்டை எடுத்துக்கொண்டிருக்கின்றனர். அதே போல் தமிழ் அமுதே போன்ற புத்தக வாசிப்பு நிகழ்வுகளிலும் ஆர்வம் கலந்து கொண்டு அந்த நிகழ்வு வெற்றிகரமாக நடந்து கொண்டிருக்கிறது. இதை தொடர்ச்சியாக நாம் செய்து கொண்டிருக்கின்றோம். அதை செய்வதற்கு அனைத்து ஒத்துழைப்பையும் உறுப்பினர் வழங்கிக் கொண்டிருக்கிறார்கள். இந்த நிகழ்வு இந்த வருடம் முதல் முறையாக ஜூமில் ஆரம்பிக்கின்றோம். ஆனால் அடுத்தடுத்து தனிப்பட்ட இன்பர்சன் நிகழ்வாகவும் நடத்த இருக்கின்றோம் இந்த நிதி சம்பந்தப்பட்ட நிகழ்வுகளை. அதற்கு உறுப்பினர்கள் பேராதரவு கொடுத்து இந்த இந்த நிகழ்ச்சிகளை பயன்படுத்தி கொண்டு தங்கள் வாழ்க்கை முன்னேற வேண்டும் என்பது எங்களது மிகப்பெரிய ஆர்வம், ஆனந்தம் ஆகும். இந்த நிகழ்வில் தற்சமயம் ஜெயா மாரியப்பன் அவர்கள் இருக்கிறார்கள். அவர்கள் நம் விருந்தினர். மிக சிறப்பாக இந்த நிதி சம்பந்தப்பட்ட நிகழ்வுகள் நடத்தி கொண்டிருக்கிறார். இந்த நிகழ்வு நிச்சயம் சங்க உறுப்பினர்களுக்கு ஒரு பெரிய வாய்ப்பு அமையும், பல விளங்காத கேள்விகளை புரிந்து கொள்வதற்கு. மிக்க நன்றி, அவரை வரவேற்கிறேன். ஒரு இந்த நிகழ்வை ஆரம்பத்திலிருந்து ஒருங்கிணைத்துக் கொண்டிருக்கும் கணேசன் அவர்களுக்கு மிக்க நன்றி. நன்றி.
நன்றி சங்கர். இந்த நீங்க சொன்ன மாதிரியே இந்த வருடம் நிறைய நிகழ்ச்சிகள் இருக்கிறது. நம் மக்கள் அனைவரும் வந்து ஆதரவு தருவார்கள் என்று பெரும் எதிர்பார்ப்புடன் இருக்கிறோம். இந்த நிகழ்ச்சியை தொடங்குறதுக்கு முன்னாடி ஐயன் திருவள்ளுவரின் ஒரு திருக்குறளை கூறி ஆரம்பிக்கலாம் என்று இருக்கிறேன். அரண் ஈனும் இன்பமும் ஈனும் திறனறிந்து தீதின்றி வந்த பொருள். இந்த குறளின் விளக்கம், நேர்மையாக எந்தவித குறுக்கு வழியுமின்றி ஈட்டிய பொருள் நல்ல அறத்தையும் நல்ல மகிழ்ச்சியையும் தரவல்லது. அதாவது அதுக்கும் மேலாக இந்த குறளின் இன்னொரு சிறப்பும் உண்டு. அறம், பொருள், இன்பம் ஆகிய முப்பாலும், திருக்குறளில் உள்ள முப்பாலும் ஒரு சேர அமைந்த திருக்குறள் இது. முறையாக ஈட்டிய பொருள் நமக்கு அறத்தையும் இன்பத்தையும் கண்டிப்பாக தரும் என்ற வகையில் அமைந்துள்ளது. அதுபோல நாம் அவ்வாறு கஷ்டப்பட்டு சிறுக சிறுக சேர்த்த இந்த பணத்தை எப்படி சேமித்து வைப்பது, எப்படி பாதுகாப்பது, நம் எதிர்காலங்களை எப்படி திட்டமிடுவது, குழந்தைகளின் கல்லூரி படிப்பிற்கு எவ்வாறு சேர்த்து வைப்பது, அவர்களின் எதிர்காலத்தை திட்டமிடுவது, நம்மளுடைய ஓய்வு காலத்தை திட்டமிடுவது, அது மட்டுமின்றி இப்போது நிகழ்காலத்தில் உள்ள வரி விலக்கு, வரி சேமிப்பு முறைகள் பற்றியும் எளிமையாக விளக்க நம்முடன் திரு ஜெயமாரியப்பன் கணபதி அவர்கள் இணைந்திருக்கிறார். அவரை பற்றி கூற வேண்டுமேயானால், அவர் 7000 பண்ணை என்னும் ஊரிலிருந்து ஊரை சார்ந்தவர். அவர் கோயம்புத்தூர் சிஐடி கல்லூரியில் இளங்கலை பட்டமும், அமெரிக்காவில் ஜான் ஹாப்கின்ஸ் யூனிவர்சிட்டியில் எம்பிஏ ஃபைனான்ஸும் படித்தவர். ஜெராக்ஸ் கார்ப்பரேஷனில் சீனியர் டைரக்டராக பணிபுரிந்து பின்னர் பொருளாதார துறையில் தன் பணியை தொடங்கியவர். சிஎஃப்ஏ பட்டம் பெற்று சிறு மற்றும் குறு நிறுவனங்களுக்கு, தொழில் முனைவோர்களுக்கும் அட்வைசராக இருந்து வருகிறார். மேலும் சமத்வா வெல்த் மேனேஜ்மெண்ட் என்றும் எல்எல்சி நிறுவனத்தையும் நடத்தி வருகிறார் என்பது குறிப்பிடத்தக்கது. இவர் எல்லாவற்றிற்கும் மேலாக நம்மளுடைய கிரேட்டர் அட்லாண்டா தமிழ் சங்கம் ஆகிய நம் சங்கத்திற்கும் புரவலராக, ஸ்பான்சராக இருந்து பல கொடைகளை வழங்கியுள்ளார். அவருக்கு எங்கள் நன்றியை தெரிவித்து இந்த நிகழ்ச்சியை தொடங்கி வைக்க அழைக்கிறேன். அதற்கு முன்னால் ஒரு சிறிய வேண்டுகோள். உங்களுக்கு ஏதேனும் கேள்விகள் வந்தால் தயவு செய்து கீழே கமெண்ட் பாக்ஸ்ல, சாட் பாக்ஸ்ல, கருத்துரை பெட்டியில நீங்க வந்து உங்க கேள்விகளை போட்டுட்டே வாங்க. ப்ளீஸ் ஆஸ்க் யுவர் கொஸ்டின்ஸ் in the chat session. We have a volunteer to consolidate all the questions and then put them together in a document, and we will ask all those questions at the end of the sessions. We have planned this, the entire session for 90 minutes, and the first 60 minutes will be primarily focused on the content that Mr. Jay Mariappan is planning to share, and after that 30 minutes will be specifically allocated for all the Q&A. I'm saying this especially because a lot of non-Tamil people also have joined. So in order for them to understand the content and the format of the session, I have to explain this in English. சரி, திரு ஜெயமாரியப்பன் அவர்களை இந்த நிகழ்ச்சியை தொடங்கி வைக்க அழைக்கிறேன்.
வணக்கம், அனைவருக்கும் வணக்கம். Thank you all. First of all, I would like to thank you, Greater Atlanta Tamil Sangam, for providing this opportunity. So let me go and get shared my screens. Okay. Ganesan, you can see the slides, right? Yeah. Okay. Okay, thank you. Okay, so before I start, thank you for your introduction. So based on my experience, I wrote an ebook. Actually, you can find it from my website. I posted under samatwa.us under blogs. So it's only 20 pages. So whenever you have time, just please download this book. And I captured almost my 20 years of journey in the US, and whatever I learned, maybe through my mistakes or by helping clients like you. I don't want you to say do the same mistake, right? Because even if you avoid these mistakes, actually you can be very successful in the end. So again, as I said, it's only 20 pages. Whenever you have time, please download and read the book. Okay, so let's move on to the important topics. And also, before I start, whoever joined, please request your spouse to attend this session, at least for the initial 30 minutes, because I'm pretty sure it will be very helpful for them too. Because the reason is, unfortunately, we are coming from Tamil Nadu, and in Indian culture, primarily the husband or the father handles finances, right? Typically, they don't involve women into the finance. But unfortunately, the same tradition also being followed in the US even after we migrated here. Personally, I would recommend that's not a right strategy, excluding women. So that's why I'm keep recommending in all my session, please include them. Okay, this is not a rocket science, and it's a very important thing. Even on part of my book, also I put article about that, and also we did a specific women's financial planning workshop for like 6 hours. So I put the recorded session as like a 6 hours. I worked along with Vijay Mogan. So whenever you have time, definitely encourage your spouses to watch that. It will be very helpful. So to start with, probably you guys might have already seen that a lot of GoFundMe is happening in our community. It's very sad, which is emotional pain for the impacted family, and also the financial impact. So primarily, I'm going to talk about the financial impact, right? What I'm finding is a lot of our guys, unfortunately, don't have the right term life insurance, either through your employer. Unfortunately, let's say if you're working for a smaller consulting firm, probably they may not provide any term life insurance benefit. Then in that case, then you should definitely have one outside, but many of them, they don't have it. So here I'm quickly going to cover what should be the right term and amount coverage you have to consider, and also how to get these insurance, life insurance. Okay. And again, for the disclosure, I'm not an insurance agent. I'm a fiduciary advisor, independent advisor. I don't get any commission or referral from any companies. I don't have any tie-up with any insurance company or banks. I'm an independent advisor, just for your information. So the first thing is, make sure that if someone else is depending on your income, right, then the term life insurance, what you're going to get, it has to cover at least that time period. So it can be 20 years or 30 years or 35 years. So it depends on your personal family situation, right? Or it could be until your retirement, right? Then the next important thing is the coverage amount. So what should be the amount? Because what I'm finding is many of them don't actually get this term life insurance for the right amount. Many of them, they are having like a 100K, the basic life insurance what the employer offer, which is typically 1 times or 2 times of salary, which probably 100 or 200K. That's definitely not enough. And some people say, I have an insurance from India, but you are living here, not in India, right? And in India, typically they have like 5 lakhs, 10 lakhs. That's also not enough, definitely, right? So what you should consider, let's say if you own a home, right? So include your mortgage, the balance loan amount. If you have a car loan, credit card loan, and if you have a kids, the in-state expenses, it costs about $200,000. I mean, $100,000 per kid. For 2 kids, it'll be 200 easily. Then if you're going to consider out of state, then just double it. For 2 kids, it can be $500,000. and then include at least 5 years worth of your family expenses. So if you add all those things, it can be easily 1 million or 1.5 million, depending on your situation. So that's why don't just compare with others. Do the math specific to your family, right? Then come up with a number. So you have to take an insurance, the term life insurance. Again, I'm keep insisting, all you need is the term life insurance. That's all you need. I'm not going to talk about any other product. Okay, you don't need that. All you need is the term life insurance. Get it for the right term and right coverage amount. Then how do you get it, right? So the first option is, if your employer offer, irrespective of whether you're going to get it from outside or not, sign up for the basic, you always get a default, but the supplemental and voluntary life insurance for the maximum coverage what they offer. Because the benefit of what I have seen is the premium amount is normally less because the company is a corporate, they had a very good negotiating pricing power. So definitely it'll be very manageable, the premium. And also many of the time, I don't see they force you to do the medical checkup also. They're pretty lenient on that. So that's the one option. Okay. Then the second thing is always get one outside also. So how do you get it? You can go to the select quote, term for sale, policy. There are a lot of marketplaces out there. So you can get the quotes from 20, 25, 30 years, whatever, based on your need, and also for various coverage amount, 1 million, 1.5 million, and get it from good rated companies. And this is the place, don't try to save money. This is the wrong place to save money. Don't become cheap, okay? Because if you are going to get a cheap insurance, then obviously it's worthless. Your beneficiary is not going to get any benefit. So that's why the company you're going to get, make sure that they have very good credit ratings, they have very good customer service, make sure they have a very good claims acceptance ratio. So all those things you have to consider before buying these, getting this insurance. Okay? And if you need any help, as I said, or you can reach out to me or any fiduciary advisor. And if you haven't done it, please do that. And another thing strongly I recommend, if your friends, because a lot of time people who are part of Tamil Sangam or maybe WhatsApp group, they already have some awareness, they get it. But what I'm finding is the people not part of any of this network, typically they don't do that. And there are a lot of reasons. The reasons typically they are, okay, I'm in H1, I may go to India, it doesn't matter, right? You are living here, your family is here, take the right protection, which is a very, very high priority. And we are seeing that impact. I'm pretty sure probably Sangar or all the Tamil Association members might have seen it. And I'm also dealing with the impacted families, single mom. And I can literally, I'm seeing how much pain they are going through emotionally and financially. So I don't want you guys make the same mistakes again. Okay. Okay, then the next thing is will and trust. So unfortunately, most of us, this is our first generation. We moved from India to US, right? And many of them don't know about this will and trust, the estate planning laws in US. So in US, if something happened to both parents, right? So typically the kids, assuming your kids are minor, under 18, their custody will directly goes to basically the court system, since you don't have a will or trust. So the court can nominate any foster care or anyone for your kids' custody. So that's why it's very important at a minimum, right? Do a will. If you haven't done a will, if you have a minor kids, then do a will. Actually, the trust is best option. I'll explain that in a minute. But at a minimum, do the will, because the will, it's not that expensive. It's not that kind of time consuming. So again, how do you do that, right? The first option is, obviously, you can hire a local estate attorney, and he needs to have a license to operate within your local county court, right? But obviously, probably you have to pay a little bit money. For will, I heard typically they charge maybe $500 to $1,000 for just doing the will. And if you have to do the trust, probably it's going to cost $3,000 to $4,000. So that's the expenses you're looking. Then the second option is most of US employer, if you work for big companies, they offer legal benefits plan So typically they cost maybe like $5 or $10 per paycheck. So if you sign up for that, you can hire an attorney, just like your medical insurance plan, right? When you sign up for your medical insurance, you can hire a doctor for your medical needs. So same approach. So if you sign up for the legal benefits plan, you can hire an attorney in that plan. Then you can ask them to do the will and trust. So typically it doesn't cost that much, because since you're already paying, typically they do it the will for free, then without any additional cost. And obviously trust, you may probably negotiate for some fees, right? Or the third option is there are also the will maker trust softwares or online softwares are available. You can buy it through online, or even if you're a Costco member, there is a NULA will maker. You can get it for less than $100. That's all it is. It's a very self-interactive tool. All you need is all your personal details, your kids' details. Then the one important thing is you have to decide guardian and executor for your kids. So the guardian and executor could be I recommend from here, maybe your relatives, brothers, sisters, or close friends. If no one is there, obviously you can assign from India. And also you can put multiple people. You can put one person as a primary, secondary, and a third also. So you can put a lot of backups. Yeah. So that's something, again, I would strongly recommend. If you haven't done it, do it. And if you need any help, you can reach out to me. And if you have a lot of assets in the US, then I would strongly recommend go for a trust. Because the trust, there are a lot of better advantages than the will, because you don't have to go through the court process. That's a probate process. And you can structure that trust in a way it can help with the asset protection, and you can customize the trust in a lot of ways, right? And if you have a real estate property, you can do a quit claim deed so that automatically the property will transfer to whatever the successor you have nominated for your trust. So there are a lot of things you can do. It's called funding the trust, basically. First, you have to set up the trust, then you can fund even your bank account and your real estate, anything you can put it under the trust. Okay. Again, as I said, if you need any additional consulting, you can reach out to me. But as I said, there are a lot of ways you can do that. So if you haven't done it, I'll strongly recommend consider that. Okay. The next topic I'm going to focus on taxes. But Ganesan, if you want, we can maybe 5 to 10 minutes kind of take any questions, since I think it's a very important for our community. We can spend maybe 5 minutes. If you have any questions, we can discuss that.
Yeah, but I prefer to go with the flow and then take all the questions. We are consolidating all the questions. And yeah.
Okay, that sounds good. That's fine. Okay. Okay, so then the next topic is taxes. So if you look at this chart, so most of our people income, right, it's falling under this category, $89,000 to $190,000, right? And most of us will be, let's say, filing married, filing jointly. So you can see your tax rate is going to be 22%, right? Which is a lot of taxes. So if you're making 200K, so you can see easily you'll be paying $30,000 to IRS, right? So now the question is, why should we save the taxes? Because again, there is a misunderstanding in our community. Again, the same reason. I'm in H1, I may go to India, and why I have to basically do these strategies, because there are a lot of legal ways we can save these taxes, right? And before that, I'll show you why we should save these taxes. I'll quickly show you the numbers. Okay, so let's look at this spreadsheet. Ganesan, you can see the spreadsheet clearly, right? It's
yes.
Okay. So if you look at this one, so I did a very simple math. Let's say using all these legal strategy, nothing is illegal here, okay? Because these are all IRS recommended approaches, right? Either using 401k, IRA, there are a lot of different ways, tools. You can basically minimize your taxes, right? if you can save, let's say $5,000 every year, right? Look at that. And if you put that in even like S&P 500 index fund, right? Over a period like 20, 30 years or even 20 years, right? That value of that is almost $500,000. So the money, what you save, right, from your taxes, just the tax saving itself over a long period, it's going to worth 500,000. So assuming, let's say if you're going to go back to India, right, after some time, it's a lot of money. Basically, technically, these savings can pretty much meet all your retirement needs. So that's why I think in the long term, because these are things most of our people, including me, we did this mistake. That's why I'm just telling you again, don't make the same mistake again. Okay? Then the next thing is, so how do we save the taxes, right? Let's assume most of our people are working in W-2. So when you work for W-2 for an employer, right? So these are the tools available. I know it's very limited, but still I'll strongly recommend try these tools. One is through your employer, you can participate in the 401k plan. You can contribute for the year 2023, you can contribute up to $22,500 per year. And if your age is above 50, you can contribute $7,500, right? So that's itself, it can easily, let's say if you have like two people, right, husband and wife, that will save easily $5,000, that one strategy itself, right? Then in addition to that, you can also do a traditional IRA or Roth IRA, right? The traditional IRA, you can do a $6,500. Depending on your income, you may or may not get a tax benefit. But if you get a tax benefit, I would strongly recommend you can go for it. But if you don't, then you can go for a Roth IRA. So for Roth IRA, there is an income limitation. So for this year, I think if your income is above 228K, your AGI, then you cannot do a Roth IRA directly. But there is a workaround for that. It's called backdoor Roth IRA. So basically what you'll do is, you will first contribute the $6,000 to the traditional IRA. Actually, for 2023, it's a $6,500. Then after 5 days or a week, you can just transfer all the funds from your traditional IRA to the Roth IRA. That's how we do it through the backdoor. So the good thing is we are still in March. The tax deadline for 2022 is April 15. So technically, you still have time to contribute for your traditional IRA and Roth IRA. So if you haven't done it, if you haven't filed your taxes, that's something you can consider. Then there is a health savings account, HSA. So through your employer, if you have a higher deductible health insurance plan, then you can also do up to $7,750 for married filing. So that's helpful for your pre-tax, and also you can invest that fund because you will not lose that fund. This is different from your FSA, the federal spending account, right? So you can invest the money, and whatever the gains you can get will not be taxed, and you can withdraw anytime for medical expenses purposes. Right? Then the last thing is the college savings. I know the Georgia state also offers the state income tax benefit. So you can open an account with Georgia 529, and you can invest, assuming you go for an invest 529 plan, then you'll get the state tax benefit, and also whatever the gains you get, you will not have to pay any federal tax or state tax. And plus, you can use that money for any colleges within US. So, and also on top of it, for your 401k, so once you maximize your pre-tax, you can also go for what's called the mega backdoor. So basically, you can contribute your after-tax 401k. So that you can go up to $66,000, right? That will automatically goes to your Roth 401k, right? So that's another option you can try. I know there is always a debate. People ask, okay, whether I should go for pre-tax or Roth. My recommendation is, if your tax rate is, I'm talking about your top tax rate is maybe less than 12%, then it doesn't matter. I would recommend you can go for your Roth, either Roth 401k or Roth. But if you're paying a lot of taxes, your top tax rate is 22 or 24%, then I strongly recommend go for the pre-tax. So the pre-tax growth always it's better than your post-tax growth. Okay. Then if you have an LLC or if you're working as a 1099 or corp to corp, then there are even more better ways actually save taxes. You can do a SEP IRA or solo 401k or defined benefit plan since you have a company, right? And plus there are a lot of strategies. I don't think I will be able to cover all those strategies in this session. But actually there is another session tomorrow specifically for entrepreneurs who has a LLC, or if you're planning to start any business, or if you already have a business, please take a photo of this flyer, or you can reach out to me. I'll share the flyer. So please attend this session tomorrow. I'm going to extensively cover, because in the unfortunately for the United States tax code, they favor businesses a lot. So you can save a lot of taxes if you are an entrepreneur of your business, right? So I'll cover pretty extensively. Okay, so please attend that session. Okay, then the next topic is retirement, right? So obviously, every one of us are going to retire, and probably the age is going to differ from person to person, right? So the question is, how much you have to save, and what's your portfolio value when you're retired, so that you will not run out of your money, because that's the single most important thing, right? So if you ask me, then what should we do is, every one of us basically need to set up a goal, because without a goal, even if you make millions, we are going to spend it, right? Because obviously we don't have any plan for it. So I'll quickly go through one analysis model. So if you look at this spreadsheet, right? So let's assume, because your objective, again, it's all depends on your expenses, right? So let's assume after your retirement, let's assume you're retiring at age 60, your yearly expenses is going to be $90,000. Okay. So for a $90,000, what should be your portfolio? What should be your retirement savings? So when you retire, so you should have at least $2 million. So if you look at the chart, so this is a visual representation. So if you have a $2 million, so even if you withdraw $90,000 with the inflation of 3%, the good thing is you can see you will not run out of money. So that means even 90 plus 100, you will have enough money to support your retirement life, right? But let me quickly do a change. Let's say instead of 2 million, let's say you can only save 1 million, right? So look at that. So for a $90,000 with a $1 million portfolio, you are going to run out of money at the age of 73. So at the age of 73, that means after 13 years of your retirement, your balance is zero. So technically you run out of your money, right? So so based on that, so you have to decide your objective. So personally, I would recommend, because the expense is something, obviously it's very difficult to control, right? And again, projecting what's going to be, always it's going to be higher, right? But the one thing you can control is your savings and investments. So I think aim for a bigger portfolio. So I would recommend, if your expenses is going to be $100,000, then I would strongly recommend at least plan for $2 million. Or if you want your specific analysis, then you can reach out to me. I will, using your data, I'll do that analysis, so that it'll help you to establish the goal. Then once you have that, right, then you can see, okay, how much you have to save every year, whether through your 401k, IRA, all those things. And every year, how much return you have to make, right? So we can do that analysis, so that it will tell you whether you're on track or not on track. Then you can make the decision now. And the good thing is, when you're in 20s, 30s, or 40s, this is the right time, start to save more, because that's going to have a very bigger impact down the road. Another thing I think I can quickly show you the tax. So this is something you can see for 2022. Let's say if the husband is making 115 and the wife is making 115, so you can see both are making, let's say, around 250K, right? And you can see by doing simple this 401k, by doing the 20,000, or for this year you can do $22,000. You can see you can easily save $11,000, and also by doing the HSA. But if you don't look at that, for 250K income, basically you'll be paying almost $50,000 taxes to just an IRS only. Okay. Okay. So then let me move on to the allocation. So now let's say now you did all your contribution to 401k, IRA, or even brokerage accounts. Okay, how to invest, right? So before investing, you need to understand the returns and risk related to the funds you are going to invest. So the first thing is, obviously you can keep it in cash. There is no return, no risk. Then you can invest in the short-term inflation protected bond. So the return depends on inflation. So one example is the I bond, inflation protected bond, but the risk level also low. Then there is a short-term bonds, which gives about like 1 to 2% return. The risk is moderate. So when I say typically short-term, means the maturity is maybe like 3 years maturity. Then there is a long-term bond, which is 3 to 4%. That's from moderate to high risk. Because so a lot of people probably in the past 2 weeks heard about the Silicon Valley Bank, a lot of bank failures. So or the Signature Bank. So these banks actually failed because they actually invested in these long-term bonds. So you can see how bad it is. So they took the depositor money, right? The depositor money, it's basically they can pull anytime, right? But these banks, what they did is they took the depositor money, they lent it as a loan, but the remaining, they invested in these long-term bond treasuries. Even though there is no credit risk, they basically invested in the treasury long-term maturity bond. But because of the timing, because they invest in 10-year, 20-year, 30-year, suddenly, because of the inflation, the government increased the rates 9 times in the last year. So right now, even the last week, also they increased a 0.25%. Right now, it's around 5%. So these bond lost value in a huge way, in billions and billions. And particularly the Silicon Valley Bank, a lot of depositors are startup companies. And because of the current situation, they couldn't raise funding. They started to withdraw heavily from this bank for their expenses. So unfortunately, the bank didn't have enough buffer to support their withdrawal. So they are forced to sell their long-term bonds in loss. So that caused a panic, and everyone started to pull out the money. Within a single day, like $45 billion has been withdrawn from the Silicon Valley Bank. Basically, it's a bank run. So that's when the bank basically collapsed. Okay, so the same thing can happen for you too, right? Let's say if you are in closer to retirement, and if you invest everything in your long-term bond, in the last year, if you look at your 401k or your statement, assuming if you invest in bond, actually it lost 25%. It's worse than actually stock fund. So that's why when you invest in any fund, not only consider the return, but consider the risk also. That's very important. Then you can also invest in the S&P 500 index fund. So the return is annualized return is 8 to 10%, but again the risk level is pretty high. So that's why the allocation is very, very important, right? At what point, because as your age progress, because if you're in 30s, you can actually go for 100% equity, right? But once you get into close to retirement, obviously you have to plan for that, because as you can see in the chart here, because you are going to withdraw $90,000 every year, right, for your expenses. So you cannot invest everything in a high risk investments, right? So that's why you have to plan accordingly the allocation. So you have to, in that scenario, you have to keep maybe 5 years worth of your expenses in probably short-term funds, so that it's not volatile and you can withdraw the money for your expenses.
Generally, they tell the rule of 100 minus your age for the allocation between the
That's
stocks.
correct. That's a very simple rule. But again, you have to consider what kind of market you are in, right? So even let's say if you're doing the 100 minus age, if your age is 50, let's say, then 50% you're putting in bond, and make sure that what kind of bond you're putting, right? You do not, let's say right now in the last 1 year, we are in an inflation mark economy. The rates are going up. So your long-term bonds are pretty risky, right? So you have to, that's why understanding the macro also very important. Okay. Yeah. Then the next thing is, let's say if you have a short-term cash, instead of keeping that in the bank, right? Maybe you want to use that money for your down payment or for your kids' college expenses, because you want to secure your principal, right? But at the same time, you want to get some decent return, because if you just keep it in your checking account, you're not going to get much return out of it. So the one option you can consider is the investing in I bond. It's an inflation protected bond offered by US Treasury. But you can only invest $10,000 per person. So right now you can get 6.78 if you invest now. So your return is fixed for next 6 months. Then after that, your return will change based on the inflation. Since right now the inflation is higher, it's still almost around 6%. So you are going to still get a better return. And but you cannot withdraw at least for 12 months. So you have to wait for at least 12 months before withdraw money from your I bond. Okay, but after 12 months you can withdraw anytime. So that's how the I bond works. So you can put 10,000 for husband and wife, and for even for your kids also you can do. Okay, then also you can consider through the same website, the Treasury Direct. The US government also provide T-bills, Treasury bills. So right now the 6-month T-bills, if you invest, you can get like a 5% return. Or recently, because of the interest rate increase, you can put it in CD. The CD is a certificate of deposit. It's same as the fixed deposit in India, right? So Schwab, as of today, a 9-month CD, you can get 5.3%. And Ally Bank 4.6. So there are a lot of banks give it easily. You can get 4 to 5%, right? And even if you have an NRE account, like a SPA, if you keep it in a dollar FCNR account, you can get like a 5% return. Okay. So there are a lot of ways you can, instead of keeping the money in the cash, which is you're not going to get much, right? Because this is for only my recommendation for short-term investments. Okay, go for it. Then the second thing is, many of you may ask, okay, we talking about all stock investment. To diversify, you can also consider real estate investments. But I know the real estate market right now, maybe it's a inflated condition because of the COVID. A lot of property prices gone to the roof. But if you ask me, things will change. I think it's already started happening in a lot of regions because of the mortgage rate. Because during COVID, it was 2%, 3%, but now you can see 6%, 7% on a 30-year fixed rate mortgages, right? So that's why the affordability is pretty difficult for a lot of people. So you can either invest through as a direct investment in apartments, condominiums, or townhomes, or single family or multifamily properties, or you can invest through the limited partner, general partner through CrowdStreet, Fundrise, or other third-party GPs. But make sure that do a thorough due diligence on investing on any of these investments. And if you need any consulting help, you can reach out to me. I'm a fiduciary investment advisor. I can do the due diligence on behalf of you and analyze whether it's suitable for you or not. And also a lot of these investments, you have to be accredited investor also. Then if you're going for any real estate investment, make sure that the due diligence is very important. And be patient. Before investing, you can wait for months or even years to buy the right property, and make sure that the cash flow from this rental income is break even. and all the escrow and maintenance expenses. And always get quotes from multiple vendors, compare the closing cost, and minimize the closing cost, and maintain the property well, so that when you sell, at least you'll get a decent profit. And to minimize taxes, you can set up a LLC setup, then buy the properties through that, and it will allow you to take an advantage for depreciation. And solo 401k, SUP IRA. There are a lot of ways you can minimize your taxes. Then there is also a 1031 exchange. If you are buying multiple real estate properties, you can defer your taxes. Obviously, to be successful in real estate, you need to have a lot of contacts and connection with real estate agents, tax advisors, attorneys, to get the deal, implement the deal correctly. Okay. And also there is another type of investments. You can also go for startup investments. Again, this is also not for everyone, but if you have time and passion, that's something you can also pursue. You can check, there are a lot of sites you can find these startup investment. So you can be an angel investor. So you can invest like 5,000 or 10,000, invest across 5-10 startups. These startups, the failure is pretty high. 95% of the startup fail in a few years. That means you will lose all your investments, right? But there is a 5% chance the startup can make a very great multiples, 10x or 20x multiples, right? So that way it can compensate all your losses. At the same time, you can make a decent return. So the recommendation, you cannot invest all your savings into the startup. So as I said, maybe like 5% of your entire assets, again, invest at the very, very early stage, maybe like 5,000 or 10,000. So even if you're losing, it's not going to impact your kind of your financial situation, right? It will not bankrupt you. Okay, so that's another strategy. Okay, then another thing is a gift and inheritance. Let's assume if you are going to accumulate probably more than 2 million, what you needed for your retirement expenses. Let's say if you accumulated maybe 5 million or 10 million, then I would recommend consult with your tax advisor and estate planning advisor, because there is a lifetime exemption for the inheritance up to $12.92 million. But the IRS is going to probably, they are going to decrease that to 6 million. After 2026, only they are going to allow the lifetime gift tax exclusion up to 6 million. And if you want, you can start giving gift to your kids. The annual limit is $17,000 per kid, and you can start anytime, right? And even the state also puts the gift tax. So you can see this is the IRS. So at a maximum above $1 million, 40% tax rate, the inheritance. So when you, whatever the money you're going to give to your kids, beyond that lifetime exemption, so 40%, if it's more than $1 million, the gift tax itself, it's 40%. And in addition to that, if you are living in any of these states, like Connecticut or Maryland or New York, you can see there is an exclusion limit. So you have to pay the gift tax for the state also. Okay. Okay. Then finally, I would quickly touch upon the NRI selling real estate properties. Let's say if you decide to settle in US, then I would strongly recommend come up with the strategies. You may have assets in India. So come up with a strategy to sell those property in a kind of a planned way and then transfer the funds to US, right? Because there are a lot of paperwork involved, because now we are dealing with two country taxes, right? So now we have to take care of Indian taxes and also US. The good thing is India and US are part of double taxation treaty, so you don't have to pay taxes in both the end, but still you have to follow a lot of paperwork. As you can see, you have to have a PAN card, that's your tax ID in India. Probably you have to execute a power of attorney with your parents to sell the assets. And then you have to calculate the tax impact, because when you sell the property as an NRI, they will withhold TDS, maybe 22%, right? Irrespective of what capital gains you are going to make. So now you have to work with a chartered accountant in India to basically reclaim that, calculate the capital gains correctly to get the refund of the taxes. Then once to repatriate the funds, then you have to file 15C, work with chartered account, and you have to file some forms, 15C forms. Then only you can transfer the money from India to here. Then you can transfer either through NRO account or you can have a NRE account. Then once you bring the funds here, then we have to work with the CPA here to again report that taxes again here also. Okay. Then quickly recap, as I said, whatever the topics I've covered, I've captured that part of my ebook. You can download from my website, and also I've done a lot of very breakdown webinar in the past, and I uploaded in my Facebook and also embedded that in the ebook. So please feel free to listen to it whenever you have time. So this is my Facebook, the Samatwa Facebook page. I uploaded all those recording. And finally, many of you guys already know Mr. Vijay Mogan. So he runs a YouTube channel, Investment Insights. So he has tons and tons of videos. It's all 10 minutes, small videos about 401k, whatever the things I covered. So if you want to know even more detail about each of the individual topics, I strongly recommend. So he has a Tamil channel and also English channel. Please watch his channels. Then finally, as I said, tomorrow I'm doing another session for specific to only business people. If you have an LLC, if you're going to start business, then please attend the session. Definitely it'll be helpful. So I think that's all pretty much I have. So with that, I think we can go for a Q&A session.
Okay.
Ganeshan, yeah, please go ahead.
Yeah, thank you, ஜெயமாரியப்பன். ரொம்ப ரொம்ப சிறப்பா எக்ஸ்பிளைன் பண்ணீங்க. Thank you so much. 2-3 கொஸ்டின்ஸ் வந்திருக்கு. But definitely we have a lot of audience here, and definitely there will be questions and they would be willing to ask. First, I'll go with the questions on the the chat window that they have already added. Will the slides be distributed later?
Sure. Yeah, I will send it to Ganeshan. You can distribute.
Okay.
Okay.
Thank you. And moreover, we are recording this session also. The same recording will be available in GATS YouTube channel, and also we will upload it in the we will provide the link to of the YouTube video to the Facebook and even in WhatsApp groups. So please refer to this video in case if your friends or families have missed this event. Okay. So the second question is, can you please explain about probate? Can we create the will and keep it with us, or do we have to notarize it and register it?
So it depends on your state. I think most of the state, some of the state, it's optional. All you have to do is get the witness signature. That's enough. But if it's mandatory, then do the notary. Then once you do that, just keep that signed will document along with other important documents. And the important thing is, then you have to convey to your guardian executor you did the will, right? And so if you did through the online will maker, it actually produce a letter to your guardian and executor, so you can share that with them. And also there are some states or counties you can also register your will. It's not most of the states it's not mandatory, but actually you can go to your local county court, pay $10-20, you can register your will. But even if you do a will, I think somebody the question the person asked, the probate, you still all the assets will go through the probate process. The probate is basically the court proceeding, right? So basically you have to hire an attorney to go through the probate. So what they do is whatever the assets you have, and the probate process basically get that authority back to the person you nominated as an executor, so that then they can distribute that assets to the beneficiaries you have nominated. I can, in fact, show you quickly the sample probate. So if you look at, this is the kind of state of New York. So this is the form, the probate form kind of your attorney will file. So you can see he'll include your real estate, stocks and bonds, your whatever it is, that they'll include everything, and then attorney will file that. Okay. But these process, I know the state of New York, I heard pretty faster, but faster means still it may take maybe 3 months. But like California, I heard it may take 6 months to 1 year. So depending on the state where you live, the probate process can take longer, right? And then another thing, what you should do is part of the will. So this is kind of a property worksheet, right? You have to capture all those things, okay, kind of a property worksheet. So capture what your real estate, cash, your all the checking account, savings account, pretty much everything. So capture it here and stick it with your will, so that the person you assigned at least will know what to do. Because if you don't document, or if you don't have any detail, obviously it's very difficult for your executor to implement it, right? So that's why. But if you do the trust, it's pretty different. So if you do a trust, it doesn't go through the probate process at all, right? So technically, once you set up the trust, you can put all these assets under your trust, right? Even if you have a real estate, you can put it under your trust. If you have a checking account or any bank account, so that can be part of your trust. So the only thing which escape the probate is your 401k, assuming if you nominate your beneficiaries, your 401k, IRA, all these retirement accounts, that will not go through the probate. That's why make sure that you nominate beneficiaries in all the accounts, wherever they allow you to nominate your beneficiaries. So put your spouse as a primary beneficiary and your kids as a contingent beneficiary. So that's very important. So that way, that escapes the probate process. Even without trust, it will automatically goes to the beneficiaries.
Okay. Good question. So opening the trust and all, can visa holders can do it in US, or is it applicable only for GC or citizens?
No, even for H1 they can do.
They can do.
Okay.
Okay.
Yeah. The only thing is the will and trust, what you do, it will not include the Indian assets, right? Whatever you do is whatever you have it in the US.
US. Okay. Thank you. The next question is, can you please elaborate quitclaim deed?
Yeah. So the quitclaim deed is basically what it is. So once you set up the trust, right? Let's say if you have the real estate properties, right? So currently, usually your real estate is owned by you, right? You are sometime they're part of deed, your spouse also. But by doing this quitclaim deed, so you can nominate your kids because they are the successor trustee. So that if something happens, so that the real estate property, by implementing this quitclaim deed, it will automatically goes to your successor trustee. In that case, your kids. Or if you nominate, if they are minor, then you can nominate another person. Basically, you'll be the custody of the trust until your kids are major. So that's a good thing about the trust. You can customize in a lot of ways. Let's say if you have 2-3 properties, and if you want to probably give one real estate to your first kid and maybe another to another kid, you can set up 2 trusts, and then you can implement that according to your needs.
Okay, thank you. For the next question is, for 401k contribution percentage decisions, what are the some factors that should be taken into account?
Yeah, so the
allocation to
yeah. So for the contribution, as I said, right, if you are in the top tax bracket, as is shown here, right, if you are in 22%, 24%, 32%, my personal recommendation is increase your contribution as much as you can. right? Obviously, you need your take-home salary to cover your family expenses, but try to maximize as much as you can so that indirectly you'll get the tax benefit, right? So if you look at the long term, I think it's a pretty beneficial for you.
Fight them, you will die. What will you do?
I'm sorry, could you please restate? Your audio is not clear. Somebody. Ganesan, if someone was asking the question.
Yeah, is someone asking the question? No, that must be someone. I believe.
Go ahead, Ganesan.
Okay. Yeah. So, thank you. And what happens to your CDs if the bank you take a CD with goes down like a SVB, Silicon Valley Bank?
So the CD, yeah, great question. So CDs, it's up to $250,000. The CDs are FDIC insured. So I recommend, let's say, if you have more than 250K, then I would recommend split the CD. So get one CD from bank A and another CD from totally from different bank. Don't put it in one bank. So basically, just split the bank. So then that way you're 100% protected.
Correct. The question also, covers if the interest is also covered under the 250K.
Yes, as long as it's the value, yeah, whatever you're making, right? The amount, as long as within
total
the
amount,
range,
including the
amount,
interest
yes.
and the principal,
Yes,
if
yes.
it is less than 250K. And
That's
there are
right.
some banks which does the diversification for you, right? Like I can go
Mhm.
to bank A with $1 million and tell them like, hey, I want to split this into, four accounts in four different banks so that I don't have to manage four different bank statements, logins, and all those. The bank themselves do this, right?
Yeah. And also, what I found is if you have a joint account, actually it's better. If you have both wife and husband, actually indirectly you'll get protection up to 500K because every person, right? So that's also you can try that. Yeah.
Yeah. Thank you. If we have not maxed out 401k for 2022, the previous tax year, is there an option to contribute now?
Yeah, unfortunately, there is no way you can go back because since it's doing through your employer already done the W-2. So there is no way you can go back and do that. It's too late. It's late. Yeah.
Yeah, but for, if it is an IRA, we can contribute to the
Correct. Yeah, the only thing is you can still drive the traditional IRA, 6,000 each for tax year 2022. Then assuming if you're getting the tax benefit, then go for it. Yeah.
Say if a family exceed the contribution limit for that year, for that IRA, okay, so there is a limit the federal government has put in, right? So if your income is about 224K or something, right, then your contribution is not tax deductible. So my question here is it just not tax deductible, or you are not even allowed to, contribute the amount?
No, see the traditional IRA, there is no income limit. Anytime you can contribute the traditional IRA, there is no issue with that. But the question is, you may or may not get a tax benefit or not. Okay. But for the Roth IRA, that's where the income comes into the picture. The AGI, if your AGI is above 228K, you cannot directly do the Roth IRA. But in that case, as I explained before, you can do a backdoor Roth IRA.
Okay.
That option is good. Yeah.
Which is first contribute to IRA and then roll over to
then roll over into the
IRA.
Correct.
And when we do that, it has to be a complete sweep rollover.
Correct.
Right? We cannot leave any amount in that IRA when we do the rollover. Right. Thank you.
That's right. Yeah.
Okay. So the next question is, what's a good amount into monthly expense for emergency fund? Are high yield savings accounts the right place for it?
Yes. So the emergency saving, I recommend at least 6 months of your expenses, or if you can, maybe you can go for even one year. So depending on your expenses, so it could be maybe $25,000 or maybe $50,000. So you can keep it in the high yield savings account, or you can keep some in the high yield or some in the bond. I mean CDs, like a 6-month CD, so that when it's called ladder CD. So basically you split your savings and put some under 3 months or 6-month CD and the remaining under 9 months or 12 months. So
Yeah,
that
people
way,
do it, even using the T-bill ladder.
yeah, correct. There are a lot of correct. You can do that. Yeah.
Thank you. And can I assign my elder son, who is 18 years old, as a guardian for my younger son?
Yes. Yeah, you can do that.
Okay, thank you. When we sell property and bring it over here, I mean, bring the money over here, I realized based on my experience that you pay tax there in India and end up paying tax here as well. Fed, we get some credit, not fully, a percentage of what we paid there. But for state like New Jersey, there is no credit and you ended up paying state tax again here. Please share your thoughts on this. Thank you.
Yes, I think unfortunately the state tax is correct. We may not be able to avoid. I was pointing out to the IRS. The good thing is for IRS, you don't have to pay taxes twice. So if you already paid taxes in India, you can work with your CPA actually to include that. You can, yes, the reason is the capital gains tax rate in India is actually higher than US, right? So that's why you always pay more taxes in India. So when you claim it here, you probably claim it as a credit. But yeah, obviously in the state it won't work out because they don't offer anything like that.
Okay. Hi, given the current bankruptcy scenario, how risky is the high yield savings account that can be opened online like Capital One?
Yeah, I think as long as it's less than 250K, I think I recommend it's not that risky. But if it's more than 250K, then I would recommend maybe split that and put it in 2 different banks, even if it's high yield savings.
Okay, thank you. If you have not done 401k for 2022 and want to do traditional or Roth IRA to the maximum allowed, which is better option? Max rate is 22%.
Yeah, so if your max rate is 22%, I would recommend start with the traditional IRA and see if you are getting the tax benefit. Because if you get a tax benefit, right, even for $6,000, you'll get a $1,200 tax refund. So that's a pretty good money. But let's say if you don't get a tax benefit, then simply move that into Roth IRA. So it become an after tax. That should be your strategy.
Okay. Someone in this group may benefit from spousal IRA. Please mention it. I think he talks about a spousal Roth IRA, I think.
Yeah, for actually for your spouse, right? Even though, let's say, even if she's not working, you can still do traditional IRA for her or the Roth IRA for her. So but definitely consider that because that will help you with your taxes.
Okay. But traditional IRA only there is an income limit applicable, right? We cannot contribute.
No, traditional IRA again, no, there is no income limit, right? Only for the Roth. Even for spouse also, because if the combined income is more than 228, then you cannot do directly to the Roth IRA for your spouse, but you can still do the backdoor for her also.
But for traditional IRA, if the income limit is high, if the income is high, will IRS allow the spousal traditional IRA?
Yes, you can still do the, as I said, the traditional IRA, there is no income limit for contribution.
But there will not be deduction, I believe.
Correct. The deduction is a different question. That depends based on your AGI. You may or may not get a tax benefit, but you can always contribute. That's why I'm saying once you contribute, if you're filing your taxes through TurboTax, even without contribute, you just plug in the numbers in TurboTax and that will tell you, right, whether you can see your tax is going down or not. Then based on that, you can make the decision. Or you can ask your CPA, ask them, okay, whether will I get a tax benefit by doing traditional IRA for me and my wife or my spouse, then they can tell you whether you get a tax benefit or not. Then based on that, you make the decision.
Okay. I have GC. If I want to sell my India assets, should I need to consolidate and sell India properties before I get citizenship here, or I can do later after getting citizenship as well?
Yeah, you can do anytime. There is no legal issues
As
between
long
the
as you pay
GC.
taxes to Uncle Sam will be happy and you don't have
Yeah,
to.
correct. Yeah, correct. I know there is maybe common misunderstanding. Once you become a citizen, you cannot buy any agriculture properties in India. But if you are getting through inheritance, like through parents, still it's fine. But obviously, the only limitation is once you become a US citizen, you cannot buy any agriculture properties in India. That's the only thing. Yeah.
Thank you. Which is the best investment? Less than 250,000 CDs or treasury bills or bonds or FCNR FDs?
Yeah, again, it's all varies from your individual to individual, right? So depending, I'm assuming he's asking for the short-term cash investment. So depending on your cash flow need, you may need it for your down payment or your kids' education. So because the I bond, again, you can only put 10K per person. So you can put, maybe if you have a family of two kids, then maybe 10 each will be 40K. So you can put 40K in I bond, right? Then the remaining you can either put in T-bills, because the T-bills you have a flexibility. You can do the kind of a ladder. You can put maybe a 3 months T-bill for some amount, or 6-month T-bill, or 9-month T-bill, like that you can put. And same thing, you can also do a CDs also. The one thing is the T-bills, obviously you don't have to pay any state tax. But if you are in a kind of a higher state tax like New Jersey or New York, maybe T-bills may be better than CDs, because obviously always mostly the T-bills rates are usually higher than the CDs. So technically, the way the CDs works, actually the CDs, the banks also, they invest in T-bills too. That's how they make that margin on their clients.
Okay, thank you. The next question is, can you brief about tax saving tips for selling RSUs?
RSUs, okay. Sure, I would strongly recommend. This is a very niche topic. I wrote an article in my ebook, separate thing. So I strongly recommend download it and read that. I explained it pretty neatly.
Okay, thank you. Can we gift to our children who are about 18 years, and how much max can we give? Is there a tax benefit for either of us or for our children in this process?
So by doing the gift, you are not going to get any tax benefit, right? So the only benefit is you will not pay any gift tax. So if you are going to do every year, so each parent can give $17,000 right now per kid. So that means both parents together can do $34,000 per kid. So that's, you don't have to report in anywhere, and there is no gift tax. But at the same time, you're not going to get any tax benefit.
Okay. Any other questions anybody wants to ask?
Yes. So the worksheet that you shared, Mariappan, the 2,090,000 worksheet, where you said for getting you need 2 million if you are going to spend, right? So does that include social security and your is it the net worth or just the retirement?
No, that's just the retirement. I built the social security, but for the demo I showed, I didn't include the social security.
Okay.
This is all the liquid assets, because my recommendation is try to stand in our own leg, right? Because who knows when whether the social security will be there or not, or how much they are going to pay 20 years from now.
Yeah.
But if it is there, then it's good. But I recommend, when you do the planning, don't just depends on the social security. Okay, just try to save and invest and have that objective. Again, the 2 million, again, it just an assumption, right? It varies from family to or person to person depending on their need. So do your individual analysis and then set up the target accordingly.
Yes, makes sense.
Anybody else? Any questions you have? I have a list of a few questions which I was planning to ask in this session. Uh, I have so that the others can also benefit from that. If there are no other questions, I
Uh,
can go.
if no one
Go
has
ahead.
any questions, I have another question.
Go ahead, please.
Yeah. So you have this, mysocialsecurity.gov where, it tells how much you get the social security and all that, right? Let's say
Yeah.
if my wife is not earning, and if she doesn't have the, necessary credit to get the social security, how does it work on my passing after retirement? Like, will she be able to get the benefit, or since she's
Yes,
not have contributed, like spousal benefit?
that's correct. Yeah. So even if she didn't have, but since you have it, so she will be the beneficiary after your life.
Like 100%? Like, will there be any
Yes.
cut or? Okay.
No, it will be 100%. Yeah. There won't be any cut.
Do we need to make her as a nominee, the spouse as nominee in the process, or it happens organically?
Yeah, you that I would strongly recommend you can go to your socialsecurity.gov website, set up an account, and you can put all those things. And obviously, when you activate, you'll go to the Social Security office to do that actually.
Yeah.
And then the biggest decision everyone has to make is at what point you are going to activate your Social Security. Because typically you can do it from age 62, but your payment will be 30% also less, or you can do it at age 67 or your full retirement age right now 67. So you have to kind of run through some numbers and kind of depending on your cash flow needs, you have to make the decision.
Okay. So, can you talk about the investment priorities or the priority, like, first, the life insurance and then emergency savings, then do the HSA? There is a list of priorities that, many financial advisors tell, right? Because people,
Yeah.
think like, investing means they just go to the brokerage first, open an account, buy some Tesla stocks, just to realize in 3 months, it's so flimsy
Yeah.
and
See that's not an investment, that's a trading, right? So I strongly recommend whoever is trading be very careful, because the trading stocks, it's not a investment. And also based on my experience, you are not going to be successful in the long run, because of there are a lot of factors involved. At the end of the day, pretty much you're going to lose your investment if you start trading your savings. And also the another thing, the issue what I'm seeing, at least in our community, is even though people are making a lot of money, but at the end of day, what I'm seeing in their savings or their net worth, unfortunately, it's not that much left over. Even people, both husband and wife are working. The reason what I'm saying is their bulk of their savings are going towards their mortgage, buying bigger homes or whatever that, or nice cars. So your money is pretty much gone there. Then the second thing I'm seeing is people spending a lot of money on kids. Nothing wrong with that, but I strongly recommend a revisit, make sure that whether really your kids like it, instead of you forcing them to do that, because there are a lot of money being spending on that. And remember, it's a year over year, right? So there are a lot of ways, unfortunately, because the reason is because they're getting this money from the paycheck, right? So the best strategy I would recommend is don't get that money in your hand, right? So how do we do that? So automate that savings. The only way you can do it through this 401k, right? Through your employer, or set up an automatic redirect of your investment or savings from your bank account to either through IRA or 529, without you are taking any step. Because if you are going to manually do it, believe me, it's not going to happen, because something will come and you'll keep spending, you're not going to save. So try to automate everything, okay, when it comes to saving, okay. So that's the only best way to save it. Then automatically, then you just put it in the investments accordingly. If you have your short-term investments, so anything you need for 6 months or 1 year, again, don't keep it in the bank, right? Obviously, if you keep it in the checking account, you may try to use it for something else, which may not add any good value for you down the road. So you can either put it in, as we discussed before, I-bond or CD. So at least you lock it for 6 months or 12 months, so that at least you won't touch it, right? And if you put it in 401k, obviously you cannot touch it until 59. So whatever the money, as I said, we talked about the objective, right? To meet the goal, because if you hit 1 million or 2 million, that means you have to save 20,000, 30,000 per year. So that saving, just automate that. Don't bring it in your as part of your paycheck into your checking account. So try to automate that savings and investment. I think that definitely you'll be successful over the long run.
Okay, so going for the, with respect to the priority I was asking about, what would you recommend? What should be, say, if I have to start from scratch, what should be my first thing that I do, second thing,
So
third
your
thing?
first priority is make sure that you don't have any debt, right? If you have any credit card, any bigger debt, paying a lot of interest, definitely pay off those first, right? Then build emergency saving at a minimum, at least 25 grand. Have that emergency savings. Keep it in these CDs or T-bills or high yield savings account. So that's important. Then once you do that, then direct all your savings to either the pre-tax, the 401k or IRA or HSA or 529. So those should be your priorities. Then after you meet all those, if you still have cash, then you open a brokerage account. Don't open a Robinhood. Okay, again, don't have anything in your mobile app. You're going to start trading. Okay, so that put it in maybe a Fidelity or a Vanguard. You don't have to log in every day. Just put it in index funds. Then forget it. Then do a systematic investment plan. $100, $200, whatever it is. Just keep save and invest. So those should be your priority.
Yeah. The user interface for doing the investment is the better one, because we stop doing it more often, right?
Right.
Okay, so thank you. Thanks for that valuable insight.
Yeah.
There is
So
one more.
in summary, if you want to be successful in this finance and investment, be simple. Don't complicate things for you. And also the investment decision you are going to make maybe 3 or 4 decisions. That's why I said don't do trading, because if you are doing trading, you are going to make a lot of trading decision because that's where people will make mistakes. If you're maximum do 3 or 4 investments, right? So that you do the thorough analysis and then do it. But if you're doing a lot of investment thing, you are going to make lots and lots of mistakes, and in the end you are going to lose a lot of money.
Yeah, well said, sir.
So
even
I have an insurance question, if I may.
Yeah, please go ahead.
Yes. So, Mariappan, if let's say like Vijay Mohan, if I want to retire early, but the only challenge is the insurance, right? Like 65 is when Medicare is eligible. What will be your suggestion? Like, are there any other option? Like, obviously the individual market is so expensive. Like, even if I choose, if I have enough investment, like insurance is like a bigger thing to consider, right?
Correct. Yeah, that's true. So you have to plan for that expenses, unfortunately. So if you are retiring at 50, then the only way is you have to get the insurance through the healthcare.gov, right? The Obamacare. But again, I would recommend, if you are going to get some early retirement, then make sure that you get some income through multiple channels, right? Not only through your W2 income. Probably you have some business or some properties through LLCs. so that some additional ways you produce an income, then using that income to basically cover your medical expenses.
Got it. And what is your opinion about long-term care insurance? Like, is it something that we need to think about later part, or?
Yeah, I think unfortunately the long-term care insurance right now, it's very expensive. The premiums are, right? So I would recommend probably you try to include that savings as part of your retirement savings, because right now the projection, the long-term care is mainly for your assisted living care or nursing home take care, right? It probably costs anywhere from 300 to 400K in total. So try to save that money as part of your retirement savings, so that if needed, it's called self-insured. Basically, you are saving it and getting ready in case if needed, you can use it. Because unfortunately, the long-term insurance, if you're going to go for, it's pretty expensive. You have to pay a lot of premium.
Like even if you start early, the premium will be expensive. Like if you are in 40s and then if you start contribute, like, take a very long term.
You can find out based on my research, because there's a lot of companies went bankrupt who offer the long term. So that's why the premium is very, very expensive nowadays. But if you find some reasonable, then again, depending on your need, if you need, then you can get it. Then another one strategy people doing, when you do the term life insurance, they offer the accelerated death benefits. So you can probably use some of those also. But again, it's not going to cover 100%, but that's another way. But unfortunately, the long-term care, I don't think we have a good cost-effective solution yet.
Okay.
Got it.
So next question is, how can I save for my kids for college? I think you answered this through 529. It's a state offered plan, right? And it has tax.
Correct. Yeah.
Yeah. And then last question is, your 40-year term insurance a good option, or just get 20, 30 or 35 years term and invest the rest instead?
Yeah, again, you look at your personal situation, right? If you are in, let's say if you are in 30, then I would recommend maybe 35, right? So again, ask the question, how long you're planning to work, what's your projected retirement age, and how long, if anyone else is going to depend on your income. So based on that, but I always recommend go for the maximum. So what should you do is get the quotes for maybe 25, 30, 35, then do the comparison, and also get for 1 million, 1.5 for different amounts, then see whether it's something it's affordable for you. But when you are younger, take the higher term. So that way, at least you lock it for the less premium cost. Because the more you wait, because every decade, the premium jumps like anything. Because if you're taking your term at age 30 versus 40, you are going to see a big jump in your premium. Same thing with the age 40 versus 50, you'll see another big jump. So that's why whoever don't have the term life, do it immediately, because the sooner is better. So that way your premium will be cheaper, because the more you wait, obviously your premium is going to jump pretty high.
Okay. Regarding the same life insurance, is IUL a good product to save for retirement?
Yeah, as I said again, any financial products, IUL, VUL, annuity, there are lots and lots of financial products out there. Okay, I strongly recommend consult with a fiduciary advisor, right? Like me or any fiduciary advisor. Don't just believe what the agent says, because the agents will get huge commissions on all these products. Okay, obviously they are not going to disclose what's good for you, because the problem what I'm saying is the suitability. These products, what you buy, whether it's suitable for you and your family. Because as I said, I'll tell you on the other side what your agents may not have discussed. Your premium will be very, very high. These products, if you go for 1 million IUL, you probably pay $30,000 premium, right? Which is very high. You may be able to do it for 1 year. Due to some reason, if you lost your job, if you couldn't do, you lose everything. And if you are going to surrender in a couple of years, you are going to lose everything, right? So that's why there are a lot of hidden things are there. You will not know that, and they may not disclose that either. That's why consult with the fiduciary advisor, understand all the other side of it. And if it's suitable, then the advisor will tell you whether it's suitable for you. So I cannot make any generic statement, but don't just decide based on just your agent recommendation.
Yeah, and it's generally a good practice to keep your term insurance different from your investment options, right?
Correct.
So
that's why I keep recommending the term life insurance. It's a financial risk mitigation tool, right? So don't confuse with the investment products versus here. So all from my recommendation, as I said earlier, all you need is the term life insurance. That's a must. If you don't have it, get the right term and right coverage.
Yeah. I think we are reaching the time, actually 2 minutes above that. I have one last question about FBAR, because many people in US, they don't have enough awareness about FBAR, and then the tax implications for repatriation, of amount from India to US accounts.
Right. Actually, if you go to my either the Samarkova website ebook or my Facebook, I did an exclusive session. I brought 2 chartered accountants from India and also CPA from here. I did an extensive session on these NRI funds repatriation, all the FR, all those things. So please listen to that. I think you pretty much you'll get all the information. But if you haven't filed FR, if you have accounts more than $10,000, then you ask your CPA to file the FR here. It's only a disclosure. It's not going to increase your tax liability or anything like that.
Correct. Thank you. Okay, I think we reached the end of the session. Thanks everyone for joining. We didn't expect this much crowd, and we are so happy that we could, do this for the,
You're in mid பண்ணிட்டீங்க.
Oh, sorry. Thanks everyone for joining. We didn't expect this much crowd. It's a excellent response from this Tamil community and also from other Indian community. Thank you so much for joining, and thank you so much, Jayamariappan, again for walking us through all the the nook and corners. And again, as I said, right, it's all legal. There is no tax evasion or anything. It's all legal. வள்ளுவர் பாஷையில சொல்லணும்னா இது வந்து திறனறிந்து பொருள் இது. ஸோ ரொம்ப தீதின்றி வந்த பொருள். அதுக்கு அதை பத்தி நல்லா எக்ஸ்பிளைன் பண்ணீங்க. ரொம்ப ரொம்ப நன்றி. தேங்க்யூ ஸோ மச். சங்கர், யூ வாண்ட் டு சே சம்திங்?
ஆமா, ரொம்ப நன்றி மாரியப்பன். ரொம்ப தெளிவா பல விடயங்களை நீங்க வந்து கவர் பண்ணீங்க. இது ரொம்ப இன்ஃபர்மேஷன் செஷன் தான். இது இன்டெப்தா தெரிஞ்சுக்கணும். அவர் சொன்ன மாதிரி நம்ம நிறைய டிக் பண்ணி தெரிஞ்சுக்க வேண்டியது இருக்கு. ஒரு நல்ல பல விஷயங்கள் தெரிஞ்சிருக்காரு. ஸோ கண்டிப்பா அவர் அணுகுங்க. அதே போல வந்து இந்த ஒரு செஷன் இல்லாம நம்ம நிறைய செஷன் பண்ணலான்னு ஒரு பிளான் இருக்கு. இந்த வருடம் ஃபுல்லா இதை பத்தி அதிகமா இன்டெப்தா ஒவ்வொன்றுத்துக்கும் போலான்ற மாதிரி இருக்கு. அதனால எல்லாரும் இணைஞ்சதுக்கு மிக்க மிக்க நன்றி. இது போல தமிழ் சங்கம் பண்ற நிகழ்ச்சிகளுக்கு கண்டிப்பா நல்ல ஒத்துழைப்பு கொடுங்க. மிக்க நன்றி. ரொம்ப நன்றி மாரியப்பன், ரொம்ப நன்றி. நீங்க தமிழ் சங்கத்துக்கும் உதவிட்டு இருக்கீங்க ஸ்பான்சரா இருந்து. அதுக்கு ரொம்ப ரொம்ப நன்றி. அடுத்த நிகழ்வுல உங்களுக்கு கண்டிப்பா சந்திக்கிறேன் மாரியப்பன்.
கண்டிப்பாங்க, ரொம்ப நன்றிங்க வாய்ப்பு.
உங்களை ஹோஸ்ட் பண்ணதுல நாங்க ரொம்ப பெருமைப்படுறோம்.
நன்றிங்க.
அனைவருக்கும் நன்றி.
அனைவருக்கும் நன்றிங்க.
அடுத்த நிகழ்வுல சந்திப்போம்.
நன்றி சங்கர், இந்த வாய்ப்புக்கு நன்றி.
நன்றி.